Hello, friends. What if the number SSA gave you was never the right number? Not wrong in a way that was obvious, not wrong in a way that generated a flag in the system or a letter in your mailbox explaining that a correction was coming. Wrong in the quiet way that SSA's calculation process has always produced errors, through earnings records that nobody verified, through surcharges that nobody explained were appealable, through benefit comparisons that were never made because nobody at SSA was required to make them. And here is the part that should genuinely stop you for a moment. The bigger number, the correct number, the one that reflects what SSA's own rules say you are entitled to, is not somewhere else. It is not in a different program or a special application or a benefit that requires new eligibility. It is inside the same Social Security account you already have, sitting there, accessible right now, through a process that costs nothing and requires no lawyer and no financial advisor. The only thing that has been standing between you and it is the information SSA never volunteered. Today, I am going to give you that information. Where the bigger benefits are hiding inside SSA's own system, which retirees are most likely sitting on an unclaimed higher amount right now, and the exact steps that turn the correct number from something you did not know existed into something that starts arriving in your deposit. Stay until the very end, because the last source of bigger benefits I cover today is the one that produces the largest permanent dollar increase, and it is the one that requires action this week specifically, because a window attached to it is narrowing right now in a way that makes waiting genuinely expensive. And if SSA Now is where you come to find what SSA never told you, subscribe right now and turn on the bell. The bigger benefits I am covering today are real, documented, and available to more retirees than most people realize. The people
here, find them. The ones who are not here keep collecting the number they were given and assume it was complete. Let me start with something that reframes the entire conversation about what your benefit actually is. Most retirees think of their Social Security benefit as a fixed calculation that happened once, produced a number, and is now permanent. SSA filed it, they accepted it, end of story. What this framework misses is that SSA's calculation is only as accurate as the data it runs on, and the data it runs on was never verified by anyone on your behalf. It was assembled from payroll records submitted by employers over decades, indexed using annual wage data, and converted to a monthly payment through a formula that SSA applies but does not proactively audit for accuracy after the fact. Every step in that process was an opportunity for the number to come out lower than it should. And for a meaningful percentage of retirees currently collecting, at least one of those opportunities produced exactly that result. A benefit that is lower than SSA's own rules say it should be. Not because of fraud, not because of a dramatic failure, but because of the ordinary way this system works when nobody is looking closely at the specific inputs that determine the specific output landing in a specific account every month. The shocking surprise is not that SSA did something wrong deliberately. The shocking surprise is that it has been running wrong this whole time, and nobody told you to look. Here is where to look. The first place bigger benefits are hiding: the earnings record underlying your benefit calculation. Your Social Security benefit is determined by your highest 35 years of indexed earnings. SSA assembled that record from payroll data going back across your entire working life. In a system that processed decades of payroll, much of it manually before digital record-keeping became standard, errors are not the exception. They are common enough that every
retiree has a reason to check. A year where an employer submitted the wrong figure. A period of self-employment that did not capture correctly. Work history from the 1970s or 1980s that was lost when an employer closed and records were never properly transferred. Each of these sits inside benefit calculations right now, producing monthly deposits that are lower than the correct amount. And the retirees carrying these errors have largely never discovered them because nobody flagged them, and SSA never sent a letter saying, "Go verify this." The dollar math is significant. An error in a single earnings year that understates your actual income by $10,000 can reduce your monthly benefit by $50 to $90, depending on where that year falls in your calculation. Over a 20-year retirement, that single uncorrected year represents between $12,000 and $21,600 in cumulative income that was always yours and never arrived. The correction is straightforward. Log into SSA.gov today. Open your full earnings history. Go through every working year, not just the recent ones, every year, including the decades before 1980. Compare what SSA shows against whatever documentation you have: old tax returns, W-2 forms, pay stubs from jobs you have not thought about in years. For every year where the figure is lower than your actual income, file a correction request with supporting documentation. SSA processes the correction. The earnings record updates. The benefit recalculates upward based on the corrected data. The new higher amount becomes permanent and compounds into every future cost of living adjustment for the rest of your life. Here is the urgency that makes acting now more important than acting later. Documentation from the 1970s and 1980s gets harder to locate with every passing year. The same correction that is achievable today with the documents you currently have may become significantly harder to support in 2 or 3 years as primary source records become impossible to find.
Window is open. It will not stay open indefinitely. Second place bigger benefits are hiding inside the Medicare deduction that is quietly reducing your net deposit every single month. This is the source of bigger benefits that produces the most immediate and the most significant deposit increase for the retirees who address it. And it operates in an area most retirees have never examined. Not the benefit side of their deposit, but the deduction side. Your Social Security benefit does not arrive as the gross amount SSA calculated. Medicare Part B is deducted before the money reaches your account. The standard monthly deduction is $185. But for a substantial number of retirees, the deduction is higher, sometimes dramatically higher, because of an income-based surcharge called IRMA that is added on top of the standard amount based on income from 2 years ago. The surcharge ranges from an additional $74 per month at the lowest tier, all the way to $443.90 per month at the highest. It is deducted automatically before the deposit arrives, and most retirees who pay it either do not know it exists, do not know why their deduction is higher than the standard rate, or do not know that it can be challenged if the income that triggered it no longer reflects their current financial reality. Here is the discovery that is shocking retirees who examine this for the first time. The surcharge is based on a 2024 tax return. If your 2024 income was elevated because of a one-time event, a retirement year with a final full salary, a home sale, a Roth IRA conversion, a large distribution, that income is gone. You are not earning it in 2026. You will not earn it next year. But SSA is still deducting a surcharge based on it because the 2-year look-back rule does not self-correct when your circumstances change. The form that fixes this is SSA 44. It documents the qualifying life-changing event that caused the 2024 income spike: retirement, property sale, Roth conversion, significant reduction in work hours, death of a spouse, divorce, and requests an immediate tier reassignment based on current income rather than the outdated return. When approved, the surcharge stops. The corrected lower deduction produces a higher net deposit starting in the very next correction cycle after approval. Retirees who file SSA 44 with complete specific documentation are recovering $74 to over $400 per month permanently. That is the bigger benefit hiding in the deduction side of your deposit, one form away from arriving in your account every single month going forward. Download SSA 44 at ssa.gov. Name your qualifying event specifically. Provide the supporting evidence that establishes the one-time nature of the 2024 income elevation. File it today. The window that makes acting now better than acting later is the compounding. Every month the surcharge runs unchallenged is a month of overpayment that produces no retroactive refund once the correction eventually processes. Drop a comment right now and tell me, before watching this video, did you know your Social Security deposit had a deduction side that could potentially be reduced through a single form? Because the number of retirees who have never looked at what comes out before the deposit arrives is exactly where this hiding place has stayed hidden. Third place bigger benefits are hiding, inside a survivor benefit comparison that was never made. This is the source that produces the most emotional response when retirees discover it, because what they are finding is not a technical error or a form they missed. They are finding that a conversation that should have happened when they were most vulnerable, in the immediate aftermath of losing their partner, simply did not happen, and that the benefit they elected in that moment was elected without the information that would have let them choose correctly. Surviving spouses who contacted SSA after their partner passed were in many cases given one option clearly, and a second option not at all. Here is your survivor benefit, here is your amount, here is your payment date. What they were not given is what SSA's updated counseling guidance now requires, a documented comparison of both available options, showing the survivor benefit amount and the surviving spouse's own retirement benefit amount side by side with the strategic implications of each collection approach. The survivor benefit at full retirement age is up to 100% of what the deceased spouse was receiving, including delayed retirement credits they accumulated. For many surviving spouses, that number is significantly higher than what they receive on their own record. For others, the optimal strategy involves collecting the survivor benefit now while letting their own retirement benefit grow to its maximum at age 70 and then switching permanently. Neither strategy is available to someone who was never shown both numbers. The bigger benefit hiding here requires one call to surface. Call SSA at 1-800-772-1213 and request a survivor benefit comparison review. Ask them to pull both your own retirement benefit estimate and your full survivor benefit amount. Ask what the implications of each collection strategy are, given your specific age and full retirement age. Ask whether your original election was documented as an informed comparison between both options under SSA's updated counseling guidance. That call is free. What it reveals can be several $100s per month difference, permanently, for every remaining month of the surviving spouse's life. Fourth place bigger benefits are hiding, and this is the one I told you to stay for because it requires action specifically this week inside the base benefit calculation itself for retirees whose initial filing incorporated an earnings record error that was never corrected. SSA's benefit reconsideration framework has been updated. Under the revised guidance, benefit reconsiderations, formal.
Challenges to the accuracy of an existing benefit calculation are now evaluated under a standard that places more verification responsibility on SSA, rather than requiring the retiree to independently prove the error from scratch. A reconsideration request initiates SSA's obligation to actively verify the accuracy of the underlying calculation, rather than simply defending the original determination. What this means for retirees whose benefit has always felt lower than their earnings history should have produced, the updated framework makes initiating that challenge more accessible and more likely to surface a genuine correction than it was before the guidance changed. The reason this requires action specifically this week is the retroactive payment calculation. When a benefit reconsideration is approved, SSA calculates a retroactive payment covering the period from the date the reconsideration was formally initiated to the date the correction is approved. Every week that passes without initiating is a week that retroactive window does not cover. Call SSA at 1-800-772-1213 today and ask to initiate a benefit calculation reconsideration based on a potential earnings record discrepancy. Before calling, log into SSA.gov and note any earnings years where the figure seems lower than your actual income. The more specific you can be, the more effectively SSA can route your reconsideration immediately. The date of that call is the date your retroactive eligibility begins. That date matters more than almost any other number in this process. Here is what connects everything I covered today. In every case, the bigger benefit was always there. The earnings record correction always existed. The IRMA appeal always existed. The survivor benefit comparison always existed. The reconsideration process always existed. Nothing new needs to be created. The rules already provide for every dollar of additional benefit I described. What prevented it from arriving was one thing. Information SSA never volunteered. The shocking surprise SSA dropped for retirees is the discovery that the complete picture of what you are entitled to was never the picture you were given. That a higher number existed inside your own account the entire time, and that the only thing that stood between you and it was someone telling you where to look. You just found out where to look. So here is what to do right now. Log into SSA.gov and review your full earnings record year by year, flag every discrepancy, and file corrections with documentation. Check your monthly deposit breakdown, and if your Part B deduction exceeds $185, file SSA 44 today with specific documentation of your qualifying life-changing event. If you are a surviving spouse, call SSA and request a survivor benefit comparison review under the updated counseling guidance, and call SSA today to initiate a benefit calculation reconsideration and establish your retroactive eligibility date before another week passes at the wrong number. 4 hiding places, 4 actions. The bigger benefit was always yours. If SSA Now showed you today where to find a benefit SSA never volunteered, subscribe to this channel and turn on the bell. Every hiding place inside SSA's own rules where a bigger benefit exists, I find it and bring it here before another month passes at the number you were told instead of the number you are owed. And share this video with every retiree you know right now. Their bigger benefit is hiding too. Whether they find it today or never is often just a matter of whether someone pointed them here.